It's Brian Preston, the money guy.
All right, let's answer Tyler's question because this is one that we've talked about, but I'm just going to throw it out there. So Tyler said, where does saving for a down payment fall in the financial order of operations? How do I think about that? And he threw this on there, particularly in a high cost of living area. So I'm assuming he's living somewhere. Housing's really expensive. I want to get on this food thing, but I need a place to live. How do I balance those? How do I approach that?
Yeah, that's a great question. We actually have addressed this several times on Q&A, as well as when we did the financial order of operations course. We've even made sure as part of the update that we specifically went deeper into this discussion. But I'll go ahead and share some of that right now too, is that I consider saving for that down payment, especially on your first house, to be part of the ground rules. It's not step 1 through 9. It's actually something you need to take into consideration even before step 1, because we all need a place to live. And I think a lot of people aspirationally, you want to get off the rent train if it's appropriate. Now it's weird right now because real estate is just booming. The pricing, and I saw a stat that the appreciation of real estate is eclipsing wage increases currently, and that's an alarming thing when that's going on, because it gives you a sense of hopelessness that I'm not going to be able to catch this thing because it's moving too fast from me. So this is why we give maximum flexibility on the first house, the first primary residence you buy. You buy. I don't know why I said bite.
Don't bite your house.
You probably hurt your dental work if you're biting a brick house. But it's one of those things where I want you to think about this with maximum flexibility. Is instead of 20% like every other talking head in the financial sphere talks about, we give you permission to get into that house with as low as 3% down payment, because I understand when housing prices are running away from you, you need to feel like you can jump in at least to be part of the system. But we have some caveats with that 3% flexibility. I don't want your housing payment to exceed 25%, or your housing expenses to exceed 25% of your gross income, because you can be very house rich, life poor if you let all of your money, if 50% of your income is going towards your housing. I mean, I'm going to just
troublesome.
I mean, because think about it, the average person is probably going to have a little bit of student loan debt starting out. You're going to have other things that are pulling on your back pocket that you're just not going to have a lot there. And I know, especially in a high cost of living area, that's tough. Yep. And that's why especially if you're younger, you might need to do the housing hack where you buy something that you can actually rent a portion of it, or you buy something that you take a roommate. I mean, there's all kind of unique things you can do, but you are going to have to be creative initially. And that 3%, by the way, only works on the first house. I do want you on the second, when you're upgrading to a bigger house, because maybe your chaos requires you to have a little more space. You're going to need to go traditional 20% on the future homes, but that first one we give you maximum flexibility.
And remember, the financial order of operations, first it's guardrails, and second it's sort of an aspirational thing. Don't forget, you got to live life, right? I mean, right now, if you want to go eat a candy bar, it's probably okay to eat a candy bar every now and then. You don't have to have a perfectly balanced meal. Sometimes if you deviate or if life happens and you have to adjust course, or maybe you can't move along in the food as quickly as you want because you have to save for a down payment because you need somewhere to house your family, that's okay. Remember, the goal is financial order of operations is merely a tool to help you achieve the goals that you have. The goal should not be, oh man, how do I get to step 9 as fast as possible, right? That won't serve you poorly, but if you're foregoing stuff like buying a house or, other things, or, enjoying making memories and doing that kind of stuff, you might be setting yourself up for something that's not fulfilling. Let it be your guide, but don't own it so tightly that you're like, where do I put it? How do I do it? Because there's some people in here who calculate, I'm saving 23.47% of my gross income. Can I move to the next step yet? Or do I have to stay in this step? It's okay. Take a breath. Breathe deeply.
And last thing on housing, because I know we need to go to the next question, but guys, don't feel threatened to make some action. There's so many things going on right now where people are waiving inspections. They're paying all cash. They're taking it as is with no due diligence on it. these things are a little scary in some ways. So I don't want you to be bullied or felt pressured into making bad decisions. You know, be proactive, create a plan, but also make sure the plan is perfect for your situation. Don't feel like, remember how I told you so much of life is driven by the whispers in your ear of consumerism and other things. It also applies to trends. I mean, right now housing is booming. I don't know that I consider it a bubble because I don't think it's going back down.
Sure.
You're not going to have a bubble burst, but I do think that it will steady out at some point. And and you can navigate through that process well, but just make sure it's appropriate for you. Measure twice, cut once. Don't let just the chaos of the current environment cause you to make a decision that you look back and go,
What was I thinking?
why did I buy those 3 2x4s leaned up against the wall and they call that a house and without an inspection? I probably should have thought a little bit more about that.